Hello and welcome. I'm joined today by our Head of Advisory, George Moscondi. George, good morning.
Good morning, Andrew.
It's the 2nd of October as you and I sit here filming this video, and your team is just about to release its investment update for the month. Can we begin by you giving us just an overview of that document, please?
Well, looking at the main asset classes, if we begin with rates, we remain negative for the time being, with treasuries sitting around about 3%. We feel that a lot of the upside is limited for the time being, and certainly a lot of the policy and certainly inflationary expectations are factored in. If we move on to credit, we favour high yield, particularly leaning towards the European markets where we feel there's a lot of opportunities there, particularly with good quality European companies. For equities, we remain positive. Again, we still like the US, although we do feel, certainly looking at the European markets on a relative basis, that on valuations and also on performance grounds, we feel that there's an opportunity to start investing there as well.
So this month, I thought perhaps you could give our viewers a bit of a world tour. Let's start close to home with Brexit. We have to talk about it. It's another big month for the Brexit negotiations. We've got the EU summit coming up this month. How do you think that's likely to unfold?
Well, I think it's going to be very difficult, and certainly I think it's going to go to the wire. I think if you look at Salzburg, which is the most recent meeting that they had, there was no real progress, and I think that's likely to be the case if we look towards this summit on the 18th and 19th of October. There's certainly going to be further discussions, and I think that's going to be quite difficult, certainly for the markets. And I think most recently I've read reports that 1 in 5 companies are actually looking for a Brexit no deal, and I think that's likely to be the case if we're going forward.
Let's leave the troubles of Brexit Britain behind us for a moment and move to Italy. So Italian debt came under increased pressure this month. We saw the yield on the 10-year bond push beyond that 3% mark, mostly because of the fiscal measures that this populist government has enacted, much more aggressive than investors were expecting, I think. What's your take on that?
Well, it's going to be a very difficult period, certainly for Italian investments for the time being. If you look at the budget, for example, it's around about 2.4% above what it really should be, and I think it's going to be very challenging to get that through, particularly when it needs to go past the EU as well. I think the main problem Italy's going to face over the coming months is really the credit agencies, and I think there's going to be significant downgrades for Italian bonds over the coming months, and I think that's going to move on and impact a lot of Italian assets, and certainly from a Dolfin perspective, I think we're going to stay clear, certainly for Italy for the time being.
So for the purposes of this discussion at least, let's shy away from Europe in general for a moment and go to the Far East, because there's some really interesting developments going on there. We've got Shinzo Abe, the Japanese Prime Minister, visiting China. He's the first Japanese leader to do that since, I think, 2011. What do you think that's going to do to the economic outlook for the region?
Well, I think it's going to be positive. I think any situation where you get the second and third largest economy meeting together and certainly having a sort of collaborative and cooperative tone, I think it's going to be very beneficial and positive, certainly for the region. And I think if you take the trade rhetoric that's going on in the background as well, the fact that these two countries are looking to sort of develop their relationship even further, given that backdrop, I think it's a positive move, certainly for the region and certainly for the countries as well.
So you touched there, of course, on the trade wars going on with the US and China. There were some interesting developments recently. The ECB came out and commented about the trade wars, saying if we do see escalation, that the impact is actually going to be most negative on the US itself. And I wondered what our take on that was.
Well, I think generally speaking, I don't think there's going to be any winners really. If you look at it from the most recent government or statistics that have come out, an increase of tariffs, anything in the region of 10% from a scenario perspective, indicates that GDP is likely to fall by the extent of 1%. And I think that's going to be a significant impact for anyone. If there is likely to be any particular positive move, I think it's going to be for China, certainly as it looks for trading partners elsewhere in the world. And I think the US will likely perhaps not necessarily benefit to the extent that they're thinking about.
So as I listen to you, I'm reminded of the Chinese curse, may you live in interesting times. These are definitely interesting times. And I wonder, in these sorts of times, what are the investment ideas that you tend to bring to the Dolfin clients?
Well, typically when the markets are directionless or driven very much by sentiment, here at Dolfin we have for our advisory and discretionary portfolios high conviction ideas. We identify investments certainly from an equity perspective and also from a credit or fixed income perspective, companies with good quality balance sheets and companies certainly from an equities which will have anything in the region of 8 to 10% upside over a 6 to 12 month period. And I feel that's an attractive proposition in these kind of climates.
George, thank you. Some great ideas and insights there from you and the investment management team.
Thank you.
And thank you for joining us. Please do visit our website to download your copy of our October investment update, and we look forward to seeing you again in the next video.